Hello and welcome to the F&O Show on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Darshan Mehta. Good morning, Agam.
Hi, Darshan. I'm Agam Akil. Here are the top headlines. Indian markets hunt for direction as global markets reflect a mixed cue. Volatility remains flat, but open interest surges in HPCL, BPCL as traders take fresh short positions in the stock futures. The stocks trade under pressure in the cash market after crude prices surged to a one-month high, re-entering the bull market. The steady deal wins and a weaker rupee may aid TCS in its third quarter numbers, which are due to be declared later today. And the GST Council will meet today to discuss a possible relaxation on taxes levied on under-construction buildings and natural disaster cess.
Okay, Bajaj Corp has reported a 10% growth in its December quarter revenues, while the margins shrunk marginally to 31%. The company has also declared an interim dividend of 14 rupees per share. Yash Upadhyay caught up with the managing director Sumit Malhotra and started by asking him about the volume picture in the quarter gone by. Let's listen in to what they had to say.
Volumes across the company has grown by 7%. Whereas our lead brand has grown by around 9.4% by volume.
So talking about those brands, what are the brands which have contributed the most to this 12.5% growth that you're talking about?
See, obviously the lead brand, which is Bajaj Almond Drops, which constitutes around 92% of our total sales, is among the fastest growing brand in our portfolio. And therefore the highest contribution comes from this brand. The other brand, which is Nomarks, has also done well, and in the period October to December it's grown by around 49% in offtake terms. So that's also doing well.
So sir, then in that case, how is the product mix developing? Are you planning any gradual changes?
Yes, we are, because obviously this dependence on one brand is something that will cause a slowdown in the future. So before that really starts hitting us, we have to diversify, and keeping that in mind, we have been launching new brands and will continue to bring in new brands over the next 5 or 6 quarters.
Sir, a word on that bit when it comes to the new brands that you plan to launch over the next 5 to 6 quarters. Any number that we could work with? Are you looking at launching 2, 3, 4 brands over the next 5 quarters?
What we have committed around 4 quarters ago was that we would continue launching a brand every quarter, and that's what we are trying to stick by. Having said that, this quarter you haven't seen the launch, but the next quarter you probably see 2 launches in 1 quarter itself.
Okay, fantastic, sir. But then coming to your gross margins, they have come off to a certain extent. Could you help us understand where this inflation in materials is coming from?
See, the largest inflation obviously comes from the rise in crude prices, which affects major raw materials as well as the other overheads like freight and such things which are directly related to crude. But the biggest effect actually happened because of both light liquid paraffin and plastic prices that went up. In addition, just about every raw material went up over the last quarter. Fortunately, I think the fact is that the crude has cooled off, and therefore you could see some expansion in margins over the next quarter, that is quarter 4.
So then, sir, how is pricing playing out? Have you taken any price hikes in the quarter gone by, and how do you see the price hike trajectory going forward?
See, we had taken it before that itself. In August, September, we had taken a 3.5% price hike, and therefore the negative impact of the crude prices actually was mitigated during this quarter. The drop in gross margin is just around 0.47%. So it is not as big as it would have happened if we hadn't taken the price hike. But with the prices cooling off at this point of time, we are not considering a price hike in immediate quarter.
Okay. So lastly, if you could leave us with a word on the outlook when it comes to expansion in the hair care and skincare business, and how do you plan on expanding your distribution network?
See, the good part is that both hair and skin have been growing well over the last 2-3 quarters. And imagine they are very different segments, because hair care or hair oils are approximately 11,000 crores, whereas skin care or the anti-marks skin care that we operate in is just around 350 crores. But both of them have been growing well. In terms of value, hair care has grown by around 12.5% this quarter, whereas skin has grown by around 17-18% this quarter. So growths are coming back, that's definitely there, and therefore for the FMCG industry as a whole, I do see some kind of improvement in top line growths this quarter as well as the next quarter. In terms of distribution, see, there was post demonetization and GST, one segment that really got affected was the wholesale basically, and wholesale has stabilized over the last 2 quarters, but it is still at a much lower level than it was before demon. To counter that, you have to increase your direct distribution. That means the outlets covered by your people directly, and that has improved significantly over the last 2 years that we have been focusing on the direct distribution. Another channel that is also doing well is the modern trade, or the open format outlets, and also the e-commerce. Though e-commerce is very small for us, but it's growing significantly at approximately 150% growth year on year over the last 2 years.
Okay, that was the management of Bajaj Corp, but we'll get straight into the F&O show, and here's we'll take a look at all the stocks that we will discuss with our guest on the show today. Firstly, we discuss counters like Tata Motors, its gain for the 5th straight session. A couple of real estate stocks will be in focus today. Cement stocks will be in focus, given the fact that there is a GST meet that is happening, and the GST on under construction projects can be cut. TCS results today, how should you play that? ICICI Prudential has been buzzing, what's happening there? HPCL, BPCL, shorts are piling up because of crude, the way they have moved up on the lower side. Ashok Leyland received a big bus order. Will that fundamentally be able to offset the weak technicals that the counter is showing? And IndusInd Bank posted a weak set of numbers yesterday. What's the way ahead for the counter? So those are the stocks that we'll get and speak on that. And before we get in the show, here's a quick reminder. If you have any queries regarding the futures and option market, especially the stocks that we spoke about, do write to us on 022, do call us on 02245404141, or write to us on Twitter, Facebook with the AskBQ hashtag.
Well, okay, well, on that note, let's welcome our experts for the day. We have Ashish Chaturmohta of Sanctum Wealth Management, who is here with us in the studio, and Aditya Agarwal of V2 Wealth Securities, who also joins us remotely. Thanks to both of you for joining us this morning. Ashish, let's start with you. Your cues right now, there's a lot of consolidation going around this mark. How are you playing this?
Good morning, Agam. So yes, I think as far as the index is concerned, there is a good amount of consolidation which is taking place. But the good part is, in this consolidation, you are seeing a good amount of stock specific activity taking place. So that is a very healthy sign, because earlier we faced this challenge that index was in a very strong trend, but that was not visible in the broader market per se. But if you look at in the last 1 or 2 weeks time frame, if you look at most of these mid cap companies, larger mid cap companies, they've started contributing. They are seeing good volume activity. There's a decent OI position getting built up in these names. So I think that's a relatively healthy sign. But as far as broader index is concerned, it looks very, very sideways. I don't think it's going to break in an immediate short term 10,750, 740 zone, nor it looks like that is going to sustain about 10,950. So that's a broader range. And once we see a decisive breakdown or breakout above these levels, that is below 10,750 or above 10,000 10,950, then only you might see at least 250 points kind of rally or weakness. But at current juncture, I think it looks very sideways. So I think the overall focus or juice is into individual stocks.
Okay, Ashish, would it be risky though to sell triangles at this point, or it would not be a bad idea?
So I think, looking into the market, it looks like one can do that, and writing a 10,700 put and selling 11,000 call, that makes a lot of sense. And as we have discussed about these levels, if this level gets crossed over on either side, that's the time you need to exit your short strangles.
Okay, that's the view that's coming in. Ashish, before I move to the other guest, a quick word. The Nifty Bank is just 2-3% away from record highs. The Nifty is quite away. Is it a better strategy for someone to start playing the Nifty Bank or trade the Nifty Bank if you're positive on the market rather than the Nifty?
So Darshan, we have been maintaining this view that long bank Nifty, short Nifty is a trade to be taken place. The reason is, if you look at from a technical perspective, Nifty Bank has already crossed the 200-day moving average and sustaining much higher than the 200-day moving average, vis-a-vis Nifty, which is just hovering near its 200-day moving average. So that's the first technical setup which we are witnessing. Now, if you look at the constituents of Bank Nifty, stocks like Axis, ICICI, State Bank of India, and even HDFC Bank, most of these names are trading either 52-week high or near its all-time high zone. So that's a very healthy sign. So even if HDFC Bank remains flat, and if you see activity coming into Axis, ICICI, State Bank of India, that can be very positive for broadly for Bank Nifty. So yes, you rightly mentioned that if one wants to trade at an index level, then I think Bank Nifty is going to offer a reasonable risk reward and the decent volatility to play within this index.
Okay, that's the view that's coming in. Aditya, what's your view on the markets? What kind of strategy are you suggesting?
Well, if we see Nifty, then Nifty is looking very sideways, means on higher side 10,900, 11,000 is a very strong resistance band. And I don't expect Nifty to break this range in the near term. Similarly, on lower side, 10,700, 10,650 range will act as a very strong support. So we're expecting that broadly market will trade in this range of 250 to 300 points. But yes, if we see stock specific, we are seeing a lot of stock specific movement in last couple of trading sessions. Bank Nifty has already given a breakout from its resistance zone. So particular counters and sectors will continue to outperform. But yes, Nifty is looking very sideways. And to take benefit of this sideways movement, we are advising our client to execute short strategy. One can write 10,850 call and 10,850 put, and the combined premium is somewhere in the range of 300 to 305 rupees. With 1.5 weeks perspective, one can short sell these call and put option with target of 240. And if the premium goes up, if Nifty shows one side movement on either side and the premium goes above 345, then one can cut the losses and exit from the strategy.
Okay, I'll just explain what a short straddle is. He explained a strategy, but for people who don't know, is when you sell at the call or at the money calls and puts of the same strike price in anticipation of decrease in volatility. When volatility decreases followed by contraction in option premium, the strategy becomes profitable. So Aditya is expecting Nifty to be rather range bound, and as time value of money corrects, you will start making money. Anyway, if on a general rule, if you're writing, the premiums actually go down much faster, so you tend to make much more money, but that's also a riskier bet that you need to take for us.
Okay, so on that note, let's take in our stock-specific calls for the day as well. Aditya, I'll come back to you. What stocks are you recommending in today's job trade?
Well, I have a one buy and one sell recommendation. Buy in Mahindra and Mahindra. Means if we see in a whole auto pack has seen a good correction in last couple of trading days. But now in last 3-4 days, we are seeing some consolidation at lower levels. Mahindra and Mahindra from 800, 810 odd levels, it corrected till 720, 715. And that is a very strong support. And now after 3-4 days in consolidation, we are seeing some up move in the counter. We are seeing some long position getting built up in the Mahindra and Mahindra. So I'm expecting that this stock can test 765, 770 next few trading sessions. Risk reward is favor of buyers. One can buy with a stop loss of 718 and target of 770. My second stock will be a sell in Hindalco. If we see whole metal pack, metals is looking extremely weak, and most of the metal stocks are already given a breakdown below their crucial support zones. Hindalco had a support in the range of 210, 212. Last week, stock gave a breakdown, and we have after that we are seeing continuously sell off in this counter. Means in today's session only stock has added almost 2.5% in open interest. So at current levels or any pullback, if a stock sees around 206, 207 207, one can use this pullback to again go short in the counter with a stop loss of 211. On lower side, I'm expecting that Hindalco can test 195 in next few trading sessions.
Okay, that's the view that's coming in. Ashish, your strategies?
So I have a few buy calls. First one is UPL, United Phosphorus Limited, has given a breakout on a 3-week chart, and if you look at the consolidation it has been witnessing, very positive accumulation was taking place. If you look at open interest addition in last 3 trading sessions, we have seen almost 10% open interest jump in the stock, so that's also very healthy sign. 765 would be my trading stop loss. On upside 810 would be my short-term target in United Phosphorus Limited. Torrent Pharma is one stock which we have been recommending since last couple of few weeks, and if you look at today's data, almost 13% open interest addition has been witnessed. Stock has given a good breakout on a weekly and a monthly chart, and from a technical perspective, since 2015 to 2018 the stock has been consolidating in a broad range of 1750 to almost 1400, 1300 kind of zone. So that range breakout has happened after 3.5 years of consolidation, so that is also a very healthy sign. So keeping all that in mind, I think this is a buy. 1810 would be my trading stop loss. On upside 1920 would be a shorter term target in Torrent Pharma. BEL, Bharat Electronics Limited, is one stock which has formed a strong double bottom on a weekly and monthly chart frame, has seen almost 7-8% addition in open interest in last 3-4 trading sessions. So this could be initiated as a buy with a small stop loss of 90. On upside 99 to 100 would be my short term target in Bharat Electronics Limited. And one short call is Hindalco, which has given a breakdown on a weekly monthly chart frame with very heavy short additions in last 3 to 4 trading sessions. Even in today's trading session, almost 3% open interest has been added on the short side, so that's a negative sign for the stock. 210 would be my trading stop loss for going long for going short in Hindalco. On downside 196 is a shorter term target one can expect in the stock.
And that is also the common stock between both our experts when it comes to selling Hindalco, with a target of around 195, 196 between the two experts, and a stop loss of around 210 to 211. So watch out for that. That's a consensus as far as Hindalco is concerned. But with that, let's shift focus to some stocks which Darshan and I would like to talk about. And I'm going to start off with the one which is going to be in focus today. TCS is going to come out with earnings post-market, and we're expecting steady earnings despite the fact that it's going to be impacted by furloughs in the holiday season, but about a 2.7% to be precise, growth seen sequentially in revenues, rupee revenues, that is. Margins are expected to remain at a healthy levels of 26.6, and if we saw margins go back to above the mark of that targeted range of 26 to 28% last quarter, we're expecting them to maintain that, and profitability could rise by as much as 3.2%. So we're seeing strength come through for TCS, and on the whole, we're expecting steady earnings. But how are the Qs looking like? What are the F&O Qs telling us? I do remember just a few days back we had a story on TCS where there were some short build-ups, and this was of course a Bloomberg Edge story, which was put up by Bloomberg Quint from one of our experts, S. Kannan. And at this point in time, the Qs, at least as far as that particular indication is concerned, are not looking as encouraging. But you never know. These shorts are probably taken in order to hedge their positions in cash. That said, I'm going to take a look at, and I'm going to ask our experts about how they see TCS and how they would play TCS ahead of earnings. So, Ashish, coming back to you, your view here.
So honestly, I think it's more of a sideways trend. Off late, yes, some position build-up has been witnessed, but this stock somehow has managed to hold this 1840, 1850 levels. And if you look at the put writing, there's a huge put writing we have witnessed around 1800 odd levels. So I think that gives us the comfort that at least in a shorter term, I think 1840, 1850 is going to be a key support for the stock. And I think some kind of short-term base has been created. So yes, the breakout or the momentum will start once the stock crosses 1910, which will lead to some short covering taking place. But keeping this in mind, I think we are near the lower end of the range. So there is a possibility you might see a good short covering rally from current levels.
Okay, Aditya, suggest an option strategy for TCS if someone wants to play for results. Obviously, numbers will come out after market hours, but any strategy on that front?
Well, if we see TCS, then yes, 1850, 1845 is a strong support, and I'm expecting that stock may see a pullback, and in this pullback, stock may test 1925, 1940 levels. To take that disadvantage, one can buy 1900 call option, which is trading somewhere in the range of 50, 51 rupees. And if it comes around 75 rupees, one can book profit, keeping a very strict stop loss of 35. So stock will be volatile, but overall outlook is not very negative. If there's any dip also, one can use to initiate long positions, and to take benefit of results, one can buy call options rather than buying futures.
Okay, that's the view that's coming in. Ashish, one of our viewers, DN Bhattacharya, is asking, is a long strangle on TCS a good idea?
Volatility is too high generally, and whenever you buy before results, generally you have to pay a very high premium, and even if the stock shows a great amount of a downswing or upswing, normally you don't end up making money in a long strangle when it has been created a day before or two. So I would not advise to do that. Okay,
the other stock that we want to talk about is Tata Motors. Has been rather weak, but of late it's gained for the fifth straight trading session. Is that showing any signs of breakout, or you should avoid this move? Aditya, Tata Motors, what should one do? Are you bullish, or would you not take any positions?
Well, yes, the stock outlook is looking bullish for short term, but I will not buy at current level. If someone is holding, they can continue to hold with first short term target of 191, 192. If that is broken, then 198 to 200 will be the next target levels. And in last, if we see in 4-5 days, stock has rallied from 160, 170 odd levels to 186, 87 rupees. So already we have seen a good movement. So one can continue to hold longs with with target of 191 to 200 levels, but not to add any long position at current levels.
All right, Ashish, I want to take up this one with you as well. It's moved above the mark of the 50 daily moving average right now, but is this really a sign of reversal for things to come?
At least in a shorter term, yes. I think you can see a very strong pullback rally. But if you ask me whether the stock has changed the trajectory which it has been seeing for many years, it is too early to comment on that, because if some stock which has taken almost 2-3 years to see a downward swing, it will take at least 6-7 months for it to really consolidate and show you signs that whether it has started trending on an upswing. But if you ask me now, very short term, I think there can be a very strong pullback rally which can be seen in the stock. 210, 214 is something which one can expect. That itself is a decent 8-10% kind of upside from current levels. On downside, now a strong base has been created at 180 odd levels, but I think around 210 there would be an ideal area where one should look for booking gains on the long side of the stock as well.
What about ICICI Pru? That's also buzzing. Does that seem a long to you?
Yeah, I think so, because if you look at this entire basket, it has been underperforming for last many months, and now after a long time ICICI Pru has started showing some long activity taking place. I think there can be an uptick towards 375, 380 kind of zone in ICICI Pru. ICICI Pru is into F&O, so one can initiate a long keeping 332 as a trading stop loss, for 375, 380 as a target. In the cash segment, HDFC Standard Life, that is one stock which is also showing a very strong traction and delivery volume. So here also I think an uptick of almost 10%, that is a level of around 435, 440 is what one can expect in HDFC Standard Life as well.
Okay. Well, the other stock that we want to address from the auto space is Ashok Leyland. Of course, we had news this morning that it's got a fresh order of well over 2,800 buses from 3 different transport undertakings in the country. Do remember that just a few days back, Ashok Leyland was testing levels of around 93. There's been some amount of gains since then, but the real question is this a recovery, a short covering rally, or is this really something that can be used to go long on, or will we see consolidation? I think that's the big question here. So Aditya, let me come to you on Ashok Leyland now. Given the kind of trading activity we've seen over the previous couple of days, is it too early to read into the cues, or you have something going on for it?
Well, I won't say that a trend in Ashok Leyland has turned bullish, but yes, after a sharp correction, we can see a short covering move, and in this move, stock may test 100 to 102 levels. Means if we see 104, 105 was a very strong support which stock break last week, and after that we have seen a good amount of correction. So we can see some short covering move, and today we have seen some longer position getting built up. Stock has added almost 5% shares. So with a small move of 100 to 102, one can buy from current levels with a stop loss of 94. So we are expecting some up move 4 to 5% from current levels in this counter.
Aditya, anything interesting that you're spotting? It's been almost half an hour since we're speaking. Things have changed. Anything apart from the stocks that you've recommended? Anything interesting?
Well, in capital goods sector, Voltas is one counter in which we are seeing some long position getting built up. Means if we see this stock on lower side, 530, 535 is the area which this stock is not breaking for last couple of weeks now. And from those levels, we are seeing some good pullback in this counter every time. So from current levels also means this stock is a good buy with a stop loss of 533. One can buy at current levels with short-term target of 555 to 562.
Voltas is a curious one, Darshan, because this morning, if I'm not mistaken, it's put CLSA's put it on its sell list.
Yeah, so they didn't say anything the reasons. The only reason that they gave, they believe that valuations are expensive.
Yeah.
That was the only reason that they said.
All right. Okay, so that's Voltas for you. I think we should address at least the OMCs before we get going, because we're looking at some amount of weakness seeping through for HPCL and BPCL on the decline for perhaps three straight days, and well, shorts are piling up here. Ashish, anything noteworthy here? Can this be used as a more short opportunity?
See, broadly it is into a sideways trend, but within this short-term range, I think there's a weakness. But already we have seen 3 days of downtick in Hind Petro, so I think the risk reward is not really favorable. But if someone is holding short, I think 234 should be kept as a stop loss. On downside, 226, 225 is something which one can expect, but around 225, 226, I think there will be a lot of buying interest which will come into the stock.
Okay. Finally, is there anything else that you're spotting, Ashish, over the last 1 hour since trade has changed or may have changed considerably?
Yeah, so I think, two names which are looking promising within the Nifty 50 names. First one is HDFC Bank. Suddenly we are seeing a lot of buying interest coming from the lower end of the range. So this is one stock where you can keep 2105 as a trading stop loss. 2160 would be my short-term target in HDFC Bank. And apart from that, Hindustan Lever, this is one stock which has given a breakout on a daily chart, on a 60-minute chart, above 1800 odd levels, has seen build-up of almost 2.5% addition. So that's a positive sign. 1785 would be my trading stop loss. 1850 would be a short-term target in Hindustan Lever as well.
Okay, Aditya, what about you? Anything interesting that you are spotting over the last 15-20 odd minutes, half an hour?
Well, Eicher Motors among auto pack will be one stock which I am expecting some short covering move, and in this move I am expecting the stock may test 21,500 to 22,000 levels. So this is one counter in which one can initiate long positions with a stop loss of 20,200 levels. We can see easily 5 to 7% upside in this counter. Another stock will be Bajaj Finance. Means in last 4-5 days stock has seen a good correction, but I'm expecting some short covering move in this stock also. Means we saw some up move in this counter in last few minutes. So I'm expecting that this stock may test 2600, 2620 levels with a stop loss of 25, one can buy at current levels.
All right, guys. Well, on that note, I'm gonna thank both our experts, Aditya, as well as Ashish, for joining us and taking us through their views on the markets, as well as solving. Well, actually, we didn't take any viewer queries this morning, but yes. On that note, it's a wrap on the F&O show. But stay tuned to Bloomberg Quint for more news and updates.